Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be taking a look at a company that's been highly requested on the channel. It's been on my list for a couple of months, and I'm actually glad I waited to put this video out because the share price has pulled back substantially since the start of November, and I think this may be a very attractive buying opportunity if you're looking for exposure to the crypto mining space. Now the company name is Marathon Digital. It's similar in a sense to some of the other miners we've talked about on the channel, so Bitfarms, Hut 8, Hive. However, this one's based in the US and it's much larger in terms of market cap. Now before we get into the video, I did want to bring your attention to the video description below. There's a link for BlockFi. If you're sitting on any cryptocurrency and you want to earn some interest while you wait, I would highly recommend you take a look. In addition to that, you guys, if you're not already subscribed to the channel, McNallie Money, feel free to do so. Leave a comment in the section below. Let me know what you think of Mara, how it stacks up to some of the competitors, and if you're currently holding shares. And before we get into the video, make sure you smash the like button, you guys. It's a huge help to both myself and the channel. With that being said, let's jump right into today's video.
Okay guys, so that's right. Today's video, we're going to be talking about Marathon Digital Holdings. Ticker symbol on this one is MARA, M-A-R-A on the NASDAQ exchange. Now I've been wanting to get this video out for some time. We've talked about a number of miners on the channel, so Bitfarms, Hut 8, Hive. This is another one on the list, but this is on the larger side of things. So you can see here, market cap on Marathon is sitting about $3.5 billion US. That's after this substantial pullback we've seen. So if you actually look back to the start of November, this stock was trading up in the $75, $76 range. So essentially just over double where you're seeing now, which would have made market cap on this guy upwards of $7 billion US. So a very major player in the crypto mining space, again, specifically Bitcoin. And the way Marathon has really differentiated themselves in this space is they focus exclusively on increasing their hash rate. And as a result, Marathon Digital believes they can actually get a much higher return on invested dollars based on this strategy. So with that being said, I wanted to jump into their business model, do a deep dive analysis on Marathon Digital Holdings, compare and contrast them to some of these other miners we've talked about on the channel. Again, we've seen a huge pullback in the share price here. I think this could present a buying opportunity if you're bullish on cryptocurrencies long term, which I am. And if you look at the chart here, we are hitting some support levels right around $33 US. So I think this could be a great buying opportunity. We've seen a major pullback. You can essentially buy over 2 times the shares you could have a couple of months ago. And again, long term, you guys, I see nowhere for the crypto market to go but up. So I think holding some of these bigger players in the crypto mining space really does make sense if you want exposure into this industry. Now with that being said, we're going to shift gears. We're going to jump into the investor deck and take a deeper look into Marathon Digital Holdings and what separates them from some of the competitors. So as mentioned in the intro, you guys, Marathon is a Bitcoin or crypto mining company. So it does have a lot of similarities to some of the others that we've reviewed on the channel. But these guys are really focused on expanding their hash rate exponentially, buying additional mining units, and really expanding the total potential mining capacity. So with that being said, I did want to kick things off here and actually go back to the basics and explain how crypto mining works, specifically Bitcoin mining. So this is the engine that actually fuels the Bitcoin ecosystem. We're going to see some additional components of that ecosystem in a second here. Mining is a system that adds transactions and provides security to Bitcoin blockchain, how new Bitcoins enter the market. So this is really the creation process. And I thought this was important to spend a couple of seconds on because we've talked a lot about Bitcoin mining on the channel. And I thought this was a great explanation of how it works from start to finish. So a miner is actually the computer designed to solve these mathematical algorithms or challenges, problems described as Bitcoin code. So when we talk about adding additional mining units or expanding hash rate, this is exactly what we're talking about. Now the first step here is a Bitcoin transaction actually needs to occur, and that's then broadcast out to the network.
A miner then pools together these pending Bitcoin transactions into what's called a block. Now, once this block is formed, miners actually compete to hash or solve these cryptographic puzzles. So that's where the term hash rate comes from, is ability to compute or to solve these problems. So think of this as a Sudoku puzzle, you guys. They can be very, very difficult to actually solve, but they're very easy for the network to actually verify that it's the correct solution. Now, after that, once it's been solved, the network checks the miner's work. Again, it verifies that proof of work. And if it adheres to the rules of the Bitcoin protocol, that block is then verified and attached to the chain of prior blocks. So that's where the term blockchain comes from. It's a sequence of these blocks that have been approved, that have been solved, and are now connected together. Now, in return for solving that puzzle or that cryptographic algorithm, the miners are then rewarded in Bitcoin. So right now, the going rate is 6.25 or 6.25 Bitcoin per block that's actually solved. And on average, they solve a block about every 10 minutes. Now, you'll see in the bottom right, this is crucially important to understand here, you guys. This is the reason I'm so bullish on Bitcoin compared to some of the other cryptos like Ethereum, for example. There's only 21 million Bitcoin that can ever be mined. So there's a finite supply of this stuff. It will not go on forever. And this is actually providing scarcity to the entire ecosystem. So each and every day, about 900 Bitcoin worldwide are being mined. Now, a question that came up in one of my previous videos is what's going to happen to these companies once all the Bitcoin is gone? And the thing to understand here is the problems and the amount of Bitcoin that are actually being solved gets exponentially smaller and more difficult as years go on. So there's what's called Bitcoin halving events. The next one is in 2024 or expected to be in 2024. And that's going to mean that the actual amount of Bitcoin per solved block is cut in half. And that's going to continue to happen. So they're actually expecting Bitcoin, or the final Bitcoin, to be mined in the year 2140. So 120 years from now, giving a very long life to a lot of these miners. And keep in mind, as the difficulty or the scarcity of Bitcoin actually increases, the value of Bitcoin should also go up exponentially. So yes, they're going to be able to produce fewer and fewer Bitcoin, but each and every Bitcoin is going to be that much more valuable as the difficulty goes up and the amount of Bitcoins that are released per block actually decreases. And you'll see a reference to that year 2140 later in today's presentation, but I did want to spend a couple of seconds on that because I thought it was a very valid question from one of my subscribers, and it's definitely something to consider if you're investing in this space. So I'm personally not worried about Bitcoin running out, but the halving events definitely are something you need to be aware of. Now, on the previous slide, we talked about the blockchain ecosystem. So that's exactly what you can see here on the left. And companies like Marathon Digital and these other crypto mining companies are actually what's fueling this entire ecosystem. So if you compare that to the internet, you can see companies like Cisco, IBM, Microsoft, Oracle. Those are actually the underlying foundation for all of these other companies to be built on. So whether it's Google, Shopify, Meta, these are all built on that internet backbone. And that's the exact same thing as what Marathon and other miners provide to the blockchain ecosystem. So nodes, information, the actual Bitcoin exchanges, the payment processes, so companies like Square, Venmo, PayPal, these are all built on top of that underlying foundation. And if the miners weren't in place, none of this other stuff would be possible. So they're crucially important to the entire network or ecosystem. And I think that's super important to understand if and when you're investing in these companies, is all of these downstream corporations and companies rely on Bitcoin being mined in order for all of the other processes to work. And that's a perfect segue to this slide here, which really talks about the fact that we've now hit this critical mass and the adoption of cryptocurrency and Bitcoin has now hit the mainstream. So again, 21 million Bitcoin expected to be mined by the year 2140. So again, long runway here, you guys, about 120 years until the final Bitcoin is mined. Currently, every 10 minutes, 6.2 Bitcoin are released into the ecosystem, which equates to one block or about 900 Bitcoin per day. 4% of those are actually held by ETFs, and only 1.1% are held by public companies. So when we talk about the Bitcoin reserves of Hut 8 or Hive, or in this case, Marathon Digital, these are actually what combines or contributes to this 1.1%. that are held by these public companies. Now you'll see as the demand for Bitcoin increases and the rate of adoption increases, whether it's with traditional payment type companies like Visa or new crypto-based companies like Coinbase, for example, the scarcity or the demand for cryptocurrencies actually goes up. Now, if you layer on top of that the institutional investors, traditional banks, and even now countries like El Salvador, which have made Bitcoin their legal tender, it's all drawing on the demand of Bitcoin. And again, because of that fixed 21 million Bitcoin cap, that's going to lead to scarcity, which again, in my opinion, is going to lead to the exponential rise in price of Bitcoin. So now that we've looked at the mining process, we've talked about my bullish thesis for Bitcoin and cryptocurrency overall, the supply and demand relationship, I wanted to now look at Marathon specifically and how they interact with this ecosystem. So Marathon is really focused on creating one of the largest and most agile enterprises in the Bitcoin mining space here in North America. So there's a couple things they're doing to really live into that mantra. So number one, they're aggressively increasing their hash rate or the computing potential of their organization. Now they're looking to increase their hash rate from 0.18 exahash per second in January of 2021 to 13.3 exahash by the middle of 2022. So that's a 7,100% increase, you guys, and 13.3 exahash is considerably higher than any other miner we've talked about on this channel. That is a ton of computing power and really will make Marathon a top tier competitor in this space. Now, in addition to that, they're optimizing their Bitcoin production costs. So they're actually bringing the cost to mine each and every Bitcoin down. Right now, it's currently sitting at about $6,200 US per Bitcoin. Again, similar to a lot of these other companies, they're really focused on the environment and sustainability side of things. So by the end of 2022, they're looking to be 100% carbon neutral. And that's really one of the big qualms or problems a lot of people have with this industry is it's very energy intensive to actually mine these Bitcoin. And in addition to that, they're mitigating risk and increasing optionality by investing in miners, not infrastructure. So this is one of the key ways that Marathon has differentiated themselves from, say, a Hut 8 or a Hive or something like that. And we're going to actually double click on that next up in the presentation. But before we do, I wanted to quickly look at the chart on the right here. So this shows the hash rate growth at Marathon Digital since January of 2021. So the dark blue line here, you guys, is the actual hash rate on the bar graph. The lighter blue line is actually the projected hash rate. And the baby blue bar line here is actually the fully deployed targeted hash rate of 13.3 exahash. So you can see on an actual basis, the orange line here is the percent of global hash rate that Mara actually holds. And right now it's sitting at about 2%. So of all the hash rate or computing power in the world, Marathon Digital actually controls about 2% of that based on November of this year. So you can imagine once they scale up to 13.3 exahash, they're going to become a major player globally in this space. Now this slide here really talks about that key differentiator between Marathon and some of the typical mining companies. Again, Hut 8, Hive, Riot, Argo, which really focus on investing in facilities. So we'll start off with Marathon. You can see they're investing in mining machines. So Marathon's key differentiator here and their path to success is actually investing in the actual mining machines or equipment rather than in the facility. And you can actually see a comparative case study below. So if Marathon invests in $30 million of computers or mining machines, that's roughly 6,000 units at a total of 110 terahash per unit, which totals about 0.66 exahash for the $30 million investment. Now, based on that computing power, they can actually achieve an incremental 4.1 Bitcoin per day. So at a rate of about $30,000 per Bitcoin, you're looking at an additional $120,000 per day of revenue potential. And once you actually strip out the associated costs and you annualize this, you're looking at about 109% return on your invested capital each and every year. So you can see $30 million here of invested capital will yield about 109% annual return. Now compare that to actually building out infrastructure. So if you were to invest $30 million to build out a 100 megawatt facility, you'd actually only be looking at about a 9.3% annual return on invested capital. So again, some of these numbers can fluctuate here, you guys. It really does depend on the price of energy, on the price of Bitcoin. But overall, Marathon believes investing in the mining machines is far superior to actually investing in the mining facilities. And you're going to see that loud and clear when we take a look at their facilities a little bit later in the presentation here. So on that note, I did want to quickly bring this slide up. This talks about Marathon aggressively scaling their mining operations. You can see the graph on the right here is the number of purchased miners that have actually been shipped. So as of December 1st of this year, Marathon has actually purchased 133,000 miners. So again, exactly what we talked about on the last slide. This is where they're focusing their investment. They've mined 2,700 Bitcoin year to date, and in total, their reserve stands just under 7,700 Bitcoin. Now, in the intro, I said Marathon is much larger than some of the other competitors we've covered. And if you compare this to the reserve of a Hut 8 or a Bitfarms, you can see the numbers are exponentially larger here, you guys. Now, if each and every one of these miners was already deployed, and assuming Bitcoin was at a US price of about $45,000, that would now push Marathon Digital to about 7 to 8% of the global Bitcoin hash rate. So remember, they're currently sitting at about 2%. That would equate to 66 Bitcoin per day, which would mean revenue just under $90 million per month, or about $1.1 billion per year. So keep in mind, this is a $3.5 billion company. About a third of that right now is sitting in cash and Bitcoin. And based on full deployment of their mining units, they're going to be pulling in just over $1 billion a year in revenue. Now keep in mind, that's at $45,000 Bitcoin. If and when the price of Bitcoin continues to climb, those numbers are going to become even more attractive. And that's exactly why I said this may be an awesome buying opportunity if you're looking for exposure into this space and you really want to get involved with one of the heavyweights in the Bitcoin mining community. Now, these are actually the number of miners that have been shipped. So you can see over the spring and summer months, they're ramping up their miners, and they expect to have all of these units shipped by July of 2022. And that's when they're going to hit that maximum revenue run rate that we just talked about. Now, in terms of their actual facilities or mining operations, you can see there's multiple different locations. So Texas, expected in Q4 of this year. This is going to be hosted by Compute North. Again, you can see they have access to infrastructure with no CapEx requirements and renewable power on site. This is where the lion's share of these S19 miners are going to be located, about 10.0 exahash total computing power, or 100,000 plus units. 100% carbon neutral mining operation, and they've actually got the opportunity to expand even further with favorable terms at this location. Now, their Montana location is powered by Beowulf. This is about 30,000 S19 units, or about 3.2 exahash, and they've actually got a very favorable agreement with the local Native American community. And their initial or original mining facility here, again hosted by Compute North, they've got 2,000 miners on location, 0.2 exahash, and this was up and operational as of Q3 of 2020. So if you add up the three locations, that's where you're getting that 130,000 plus total mining units. And again, they're focused on adding units, not on actually building out or owning the facilities. So now that we've actually looked at the Mara business model, we've compared and contrasted it to some of the other miners. I wanted to look at their Bitcoin production and their hold on for dear life strategy. So these numbers are as of December 1st of this year. Again, year to date, they've mined just over 2,700 Bitcoin, and their total Bitcoin reserve stands at 7,649. Now, if you look down at the graph, the dark blue lines are actually showing the total Bitcoin held in reserve. So you can see that's gradually been growing throughout the year. The orange lines are actually the total Bitcoin that have been mined and held in-house by Marathon. And mined Bitcoin percentage, which is shown in the light gray line, actually shows the percentage relationship between the total Bitcoin and the mined Bitcoin. So you can see at the start of the year here, the mined Bitcoin represented only 3.5% of the total Bitcoin held in reserve at Marathon. And by November, that number has now jumped up to 37% of the total reserve Bitcoin was actually mined in-house. So very similar to what we're seeing with a lot of these crypto mining companies. They've got this hold on for dear life strategy, and that's a direct testament to their belief in the price of Bitcoin over the coming years. They don't want to sell this stuff because they know the intrinsic value is going to go up, and 5-10 years from now, Bitcoin is going to be worth exponentially more than it is today. So there's no point cashing out, and they want to hold on to each and every possible Bitcoin within their organization. Now, with all that being said, that brings us to this slide here, which talks about the company highlights. So again, they've got over $600 million in cash, you guys, 1.1 billion if you look at cash plus their Bitcoin holdings or their reserve of Bitcoin. They've got 31,000 miners that are already installed with a target of 130,000 plus by summer of 2022 and 2,700 self-mined Bitcoin in the calendar year 2021. Now, one thing that's nice about Marathon compared to some of the smaller miners we've covered on the channel, because they have such a large market cap, you can see here about 4.3 billion. However, that's based on December 6th close price of 41.81. So we have seen that pullback. We're sitting closer to about $3.5 billion. But regardless, you guys, there's a large float of shares out on the market, and you can see the daily average trading volume is over 12 million shares. So there's a ton of liquidity here, especially if you're looking to trade options compared to some of the smaller operations or miners in the space. Now, with that being said, I wanted to close out the video with the Marathon investment thesis. So for full disclosure, I currently do not hold any shares in Marathon, but this is definitely one that's piqued my interest. And again, I think it does present a very attractive buying opportunity at these levels. So they've got the scale, they're growing their hash rate exponentially here, you guys. We're talking hundreds, thousands of % growth over the next couple quarters. They're profitable, they have a very low input cost of electricity, and their production cost of Bitcoin has been reducing and is now sitting about $6,200 per Bitcoin. They're agile, they're capital efficient, so they're investing in the miners rather than the infrastructure, which we talked about in depth in today's video. This model, in Marathon's opinion, provides agility and focuses on maximizing that return on invested capital or assets. They're well capitalized and they've got strong access to capital. So as we just mentioned, $1.1 billion in total liquidity, of which about 624 million is sitting in cash. And they've got a number of existing and quality relationships in the industry, whether it's with energy providers, mining pools, or a variety of different contacts that are actually beneficial to the organization moving forward. So for those reasons here, you guys, I definitely think Marathon Digital deserves a closer look. Again, this is one of the most requested companies on my channel, so I'm super excited to get this video out. Leave a comment in the section below. Let me know what you think of Mara compared to some of the other miners, if you're currently holding shares, and what you make of this recent share price pullback. If you're not already subscribed, McNallie Money, feel free to do so. And if you're still watching at this point, make sure you check out that BlockFi link in the video description and smash the like button on your way out. That's all for now. Thanks for watching and have a great rest of your day, guys.